Hello friends. Today we are telling the story of Bharat Dynamics, India's key defense manufacturer producing guided missiles and major military gear. Let's walk through their financials, growth pattern, cost controls, margins, and what makes this defense stock unique. A decade ago, Bharat Dynamics saw 1076 crores in sales. Today, sales stand at 3402 crores, just 2% annual growth over 10 years. The real action is in the last year. Sales shot up 41% and 3 year CAGR is 6%. Historically, growth has been bumpy. There were wild swings like 43% in 2016, minus 33% in 2019, and even minus 38% in 2021, reflecting the lumpy, project-heavy nature of defense contracts. If you see a sudden jump, it's usually big orders being delivered at once, not smooth, steady growth. Expenses climbed from 1088 crores to 2929 crores over 10 years. Material cost is roughly half of sales, ranging 42 to 66%, shows constant pressure from raw materials and tech inputs. Manufacturing cost is usually 4 to 9%, a bit high for manufacturing, showing the technical intensity of defense work. Employee cost is ranged from 8 to 26%, spiking in years with temporary hiring or workforce restructuring. Other cost is stable from 6 to 16%, kept surprisingly tight despite volatility in contracts. There are no big financial leaks. Cost always tracks sales, and efficiency improves when large contracts come in. Operating profit started negative, minus 12 crores, but now sits at 479 crores. Operating margin averages 14%, a bit volatile, jumping to 26% in fiscal year 2022 and dipping to minus 1% or low single digit in lean years. Margin jumps are hidden gems, often linked directly to major defense deliveries or tech upgrades. Other income is a real support, which was 464 crores a decade ago and stays meaningful, especially in low sales years. Interest costs are negligible, and depreciation mirrors asset cycles, rising after new factory upgrades. Net profit surged from 279 crores to 561 crores now. Again, just 2% annual growth over 10 years, but with huge swings. Losses didn't occur, but there were flat years. The last 3 years averaged 15% profit growth, and the latest years saw profit up over 12%. EPS went from 1,212 rupees to 15.29 rupees, adjusted for splits. So shareholder value grew, but mostly with quick jumps after big delivery periods, not regular compounding. Return on equity is stable, 14.4%, good for a government manufacturer. Return on capital employed is 19.7%, solid capital usage. Dividend yield is 0.29%, low by industry standards, but investors get paid regularly. Stock PE is 105, sky high, with market pricing in future defense orders. So, Bharat Dynamics is a classic lumpy grower, years of flat or negative sales, followed by roller coaster jumps as large orders arrive. Consistent profit is helped by strong other income and tight cost control. Overall, Bharat Dynamics is for patient, risk-taking investors. Growth comes not in steady steps, but by leaping from order to order. Their debt-free status and efficient profit sharing make it stand out among defense PSUs. But the high PE means the market expects big new contracts, so timing and patience are key. If this helped decode Bharat Dynamics, hit subscribe to Wealth Growth Club and comment on which defense or infrastructure story you want next.